All right, good evening, everybody, and welcome to your session. To start, I think there's something I want to mention because I'm having the basics class, which is the forexfactory.com. Now you understand that for most of you that have been trading before now and new, through interactions, you would have probably heard people talk about news in trading. Where people talk about, there's news today, there's this, that. These news are not random. They're sites whereby you can, because there was somebody that was asking me their Twitter follow and all of that. Instead of going through all that stress, just go to which shows all the news to anticipate in a day. Now, these news can be high, high value news, or they are the ones that are low and just impact, right? You have high impact news, you have impact news and low impact news. High impact news affect the market, whereby it leaves significant move in the market, like when you see core CPI and the rest of part moves are the ones that may not really even create a news can be read and then nothing changes in the market, no significant volatility at all, right? Why medium name is as well, right? Maybe little or no movement or difference during news. Now, if you look at my screen, this is okay. This is forexfactory.com. So you just go to your browser or whatever search engine you to use. You type forexfactory.com to something like this page. Now, this is what the page looks like, right? Now you can see for this page, everything. This is for today. This is all the news that there is for today, and then clicking here now, like moving to the button, you are for 5th, you are for 6th, just like for the news available for any trading day between the dates, right? Back to 4th of April, which is today. But we had high impact news. How do you know news with high impact? Now, if you look at my screen, there are boxes. You see this point that says currency, that you see CNY, GBP, CAD, USD, right? Right next to them, you're going to see what? Boxes. Now, these boxes, some of them are red, some of them are what? Orange, right? If you look at what I'm showing, some of them are red, some of them are orange, some of them are what? Yellow. Whenever you log into forexfactory.com to check news for that current day, right? The ones that are shown in red are the high impact news. They are the ones that affect the market. Like if you notice today now, for most of you that have been noticed, there was a bearish move on I think the USD pairs. You can see here now there was news pairs by 12:30 p.m. If you check this to West African time, I think it'll be 1:30 p.m. Right? You can see that there was what bearish 1:30 p.m. for this USD pair. So every pair that has USD, whether for quote currency, whether as a base currency or as a quote currency, is going. This means that both USD CAD and GBP USD or AUD USD, whatever, so long as what there's USD quote, is going to be what affected, right? So you can see here now, you see the ones that have high impact, like I told you, are the ones that are in red. They have high impact. The medium impact is, I think, the orange, while yellow are the ones with what? With impact. right? So which means that to, we had what high impact news that affected CAD is CAD showing red, CAD showing red by 12:30. So by 12:30 we had what? So by 12:30 today we had news that did what that affected CAD pairs, every pair having what both CAD and USD as either base currency or currency is going to be what affected by the what high impact. Do you understand? That are very red are just you know how red is to represent danger. So when you see the ones that are red like this, that should be what comes to your mind. Okay, this is what this is giving danger. Do you understand? High impact news that the ones that are very affected. And if you even go to where is Saturday, there's no much market is going to be closed. You understand that the forex currency markets the Monday to what Fridays. I told you guys before, and I said that the cryptocurrency market is what active 247. But since this is a forex factory news, you can see showing right. There's literally no need showing what's brown and empty, right? If you like thinking you with a phone to this forex factory, you'll just be able to just scroll and see what you're looking for better on the phone. Forget the roof on my iPad. April 6, 2025, which is trading day as well. That's Sunday, so that's there. But then here's Monday, April 7th. You can see the news here. They are all what? They are all low impact news, yellow or true, right? So they are what? Low impact. Any high impact news on Monday, Tuesday, no high impact news on Tuesday. On Wednesday as well, I think Wednesday is now we're having what high impact news. I told you that the ones on red are the ones that what that right, and then you can see that on Wednesday by 3 a.m. Nigerian time, you have what high impact news ZD pairs. So whether these are going to be affected, and you have what again by 7 p.m. I think 7 p.m. you have what high impact news on DPY pairs. 8 p.m. Nigerian time again on USD pairs. That's FOMC, right? So pairs that have what USD as currencies are going to be what affected. Now this is how you know. Talk about this news today. There's without needing to ask people which time and just come to forexfactory.com. In fact, the news is having the time. Do you understand? Whatever time you get here is usually GMT, right? Just convert it to or that's if you are in Nigeria, of course. You just like try to convert it whatever time zone that you are, right? And get it by yourself. I just wanted to mention this importantly. Now, today is today is a session. So, if you have questions so far, I don't want to limit it basically to just the sent with topics. So, whatever question you have, what we've done from the beginning, you can just put your hands up, right? And then I'll pick, just go straight to your question. There's no need to greet me or any other person on the call to be so long that people recording again. Do you understand? Because of attention. Muted, ask a question to show for your question to be answered. Have any question, just you can raise your hand now. If somebody asks in your mind, then you put your hand down. Just like that. There's no need to pick up what I wanted to ask, thank you, all of that. Right? So it's like this person, apologies if I don't get this right, maybe or something like that. So I just unmuted you. You can speak.
All right. I think your network is cracking. I don't know if it is my network, but can you hear me?
Hey, very well. Yes,
You can.
very well.
Okay. So my question is, when it comes to mitigation blocks, where is your entry ought to be placed? Number one, and secondly, your stop loss, where is this supposed to cover? Then, secondly, my second question is, when it comes to reclaimed order block, when let's say the order block is reclaimed and it doesn't come back to your entry almost immediately, and it breaks multiple structures before coming back, is it still valid?
When your order block is, sorry, let me start from the first one.
Okay, the first one.
Don't go down. Yeah. So the first one you said, when you have mitigation blocks, what they look like, right? And one thing I want you guys to know, most of these PDRs, they are pairs whereby they have stronger strengths. Do you understand? Especially the mitigation blocks, they are stronger, like better strengths, and they are pairs whereby out more. Do you understand? So I think I'll have to like generate for you, but then continuation, the lower lows are expected to send down, and the higher highs are expected to send, like something like this, right? So when you're marking there's going to be like a sort of, will I say, engulfing the stick? Maybe sometimes not engulfing, it can be tweezers, it can be anything. When it's looking out with those two last candlesticks that formed an imaginary order block. This is not a demand zone because it didn't put in, but that point here, this extreme where you're mapping out from, it must be the lower low. Do you understand? There's nothing, it's not like you can find mitigation blocks up here or something. It must be what the lower words, that this must be an impulsive break, just like this. Do you understand? So you're mapping out with those two candlesticks. Are you clear with that?
Yeah, I am. Okay, so the stop loss should just cover the lower low, right?
Yes. Let's say if I'm going to buy two on this now, or I sell two on this now, this is how it should be.
Oh, all
You
right.
understand that? Yeah.
All right.
Right, please. Second question.
Okay, the second question is, let's say another block, a reclaimed order block gets reclaimed, and it doesn't come back to the reclaimed order block immediately. Probably, let's say it's in a bullish scenario, then the order block was taken out, then it was reclaimed, then it didn't come back to the entry for that reclaimed order block, and it's breaking structure to the upside. Is there a specific number of break of structure whereby we can say, oh, if this thing comes back, it's going to demolish my stop loss?
Not exactly. So the thing is that continued. Do you understand? Whereby price keeps on like nose and zones and continues. But when it is now retracing downside, these zones that are still unmitigated are the one ending back up. Do you understand? So being ignored at the moment, to put that they are no longer valid. The only reason why you can now date it is if they are now going against the trend. Yeah. Well, if not, yes, they are still valid. You are waiting for price to retrace to those areas.
Okay. All right. Thank you.
Yeah. Next person, please. You can unmute yourself.
Hello, Star. So, can you hear me first of all?
Yeah, I can. Please go ahead.
So I have two questions. One is about the PDRAs, and then second one is about demand and supply. So just as this two questions that I have the chance. So the first one about PDRAs, like this order block, breaker blocks, and reclaim blocks, which you taught us recently. If you can go back to the chart, or I can maybe be able to explain it right. But let me just ask it. You have an order block, another block, yeah, now for example, this one that you drew here, this box here, when the price retraced to that place, we were all expecting that, or we could say that people who might not know about other blocks and breakout blocks were expecting that it was supposed to buy from that place, right? But now it did not buy. It broke that structure, it broke that other block, and then the other block failed, and it formed a breakout block. Now the breakout block now, okay, people now saw that, oh, it broke, so the market wants to reverse now. And then it reverses a little bit, it's back to the other block, and then people are like, okay, I want to sell, and they put sell orders, but now the breakout block fails, and the reclaim block takes it back, and then continues the trend to the uptrend. So my question is that first failure of the other block, and then the failure of the breakout block, can I call that an inducement? Like it's clearing liquidity. You know, people were expecting to buy first, and then they were later expecting to sell, but it's liquidated them. So can I call that like liquidity or inducement? That's the first question. Can I ask the second one, or I should wait first for the answer?
Okay, just give me a minute before you go on with the same. What you're saying is used to like explain what inducement is to somebody. The charts, that is a valid demand zone that you are looking to take a buy from.
Yes.
As at the point you're buying, before that demand zone it wasn't an inducement to you. Instead, it had an inducement, maybe above, below it. Do you understand? Yeah. So it's wrong to say that like whatever happened in that inducement, because most of it, that the attention by the other block would play out without having to be reclaimed.
Yeah.
The whole concept of breaker blocks and inflammation comes with the inability of these bullish order blocks to send price up, or the inability of these bearish order blocks to send price down. Understand? So in cases whereby they do what they are supposed to do, inducement, no. Do you understand? So I feel like, it's something that you just, it's something you just say in your head that sounds correctly in your head. But when you say doubt, it's where you're coming from, but it's just not exactly correct like that. Do you understand?
So the other block was normally supposed to buy, but now it's bought. But it's it down a little bit, but it's eventually got reclaimed and bought. So because of that, it will not be correct to say it's an inducement. Is that what you're saying?
Yeah.
Okay. Thank you very much. I get it. No problem. So here's my second question. So from the class so far, I can see that demand and supply zones are very, very important. Like it's non-negotiable. If you want to be profitable, demand and supply zones. I mean, is it not the other block and reclaim block? The other block is simply a demand zone, is it not? So demand and supply zones are very, very important. They are non-negotiable. So I want to ask, is it okay? There are some indicators on a trading view that automatically marks certain demand and supply zones for someone. And I heard somebody talk about using it before instead of marking it as themselves. So will you recommend that kind of approach? What do you think about it? Using indicators?
No,
I can hear you.
This question is the question is, will I say smart in a good way, right? Now here's what I want you to a question. It's called the order block by Nephew Sams, right? But here's what I want you to know. Now this indicator randomly maps out order block charts Do you understand? Like if you look at what's happening here now, for the when you put on the indicator now, it's going to map them out. It's on now. You can see it mapped it out in
Yeah.
red. Stand.
Yeah.
For the bullish order block, let me see if there's anyone mapped against bearish order blocks being mapped out. So yes, it's going to map out order blocks for you, bullish or bearish. But one thing you should now be careful about is the demand zones. There are demand zones all over the chart. It's about supply zones. There are supply zones all over the chart. Do you understand? They help you map out other blocks, help you map out, they call it, FVGs, you know. They are indicated to map out all of these things. But worthy of note is what is the valid. There are demand zones and supply zones everywhere on the chart, but how many of them are valid for you to put on? Understand? So that is
Yeah.
where this indicator, like exactly everything. So if you're somebody that would want to incorporate it in your trading, right, you still need to go through the validation phase.
Yeah.
So it's almost like, do you understand?
So I must understand how to validate demand and supply zones before I can even think of using an indicator. I understand you.
Exactly. You still
Thank you
supply
very much.
zones. Yes, everything still boils down to demand and supply, because you understand that at the end of the day, what makes up the market? Buyers and sellers, right? You're making money because people are, and you have to buy, you have to sell. So that is the concept of demand and supply, giving and collecting. Do you understand? They are just buyers and sellers in the market. So demand and supply zones are like the most part of trading after interpreting what market structure. That's what everything is going to boil down on. Even your what's derived from the concept of this demand and supply. So you're very important. That is what almost everything is going to fall back on. Are you clear now?
Yes, I'm clear. Thank you very much. Just to add, it seems your voice is breaking, so I don't know if you can do something about it. It breaks a little. Though I understood
All right.
everything I heard what you said, but it was breaking.
Okay. Good evening, Big FM. You gonna make a
Hi,
question?
Star.
Hello. Good evening.
Yeah. Okay. My question is on the AUD USD. I don't know if you could go to the chat, please, so I can point it out for you. Can you hear me?
Yeah. Yeah. You asked me to go to.
AUD USD, please.
Oh, okay. All right.
Okay.
Um,
So on the last video on mitigation blocks, you had pointed something out on this AUD USD, and I had
yeah.
a misunderstanding. Can you go to the 4-hour time frame, please? Yeah. Okay. So for the other block that you had initially mapped out, that you were expecting price to come back to as I think a reclaimed order block. My question was, when you marked out your order block, the break of structure for inducement had not happened then, but you later marked it out up above, like after the breaker block was mitigated, the next high that was broken, that's where you marked as your second break of structure, which equated to, I think, your
This
inducement.
was point. I want to make sure that we're talking about the same point of interest. Was it this one?
Yes, that one. When you had marked out that point of interest, the first and second break of structure had not yet occurred.
Here's the thing. Price was on trend, right? And then it created this low, this high, this high. Do you understand? And then that low,
Yeah.
to sweep this low and would continue to the upside. This is a strategy that when something like this happens, this is not an interruption to the trend. Understand? When something like this happens, it is not an interruption to the trend. So long as it went ahead, put in high. So as at this point, this was what internally was bull. That's why when we get to entries, there's something called like two type of entries, which is what this is about. I think there's so that I don't going in depth in it. But in tomorrow's class, right, you definitely understand what happened here. It's like this, it's still very much what do you understand? Because this went ahead to do what putting in your heart. I told you after the first change of character, you need what another break of structure from the new. So that break of structure, whether it took out a low or whatever, so now price was reverse and putting another high. Do you understand the confirmation for a new trend? Is that okay?
Yes, I understand now.
All right.
Yeah, thank you.
You're welcome. Emmanuel, put yourself sharp and just go straight to the point. I can't hear you. I can't talk. Uh-uh. Stan, can you hear that person?
No, not at all.
No, I can't hear anything.
Messi, I don't know. It just look like you're talking in small letters. Can you try to be a bit or more audible? Let me move to the later. Check if you're connected to a device and then I can try to talk. But before then you can unmute. Well, 23, I don't know how to pronounce that name if that's correct. Which is so. Okay. Next person, OG Bros. Can you hear me?
Yeah, good evening.
Hey, good evening, Fred.
My question is this. I dropped the question in the question section. So, in a situation whereby we have an order block, maybe a valid demand or supply zone before a breaker block, which one will price react from first?
If you have an order block,
Yes, before a breaker.
block,
Yes.
Yeah.
Yeah.
You know, breaker blocks are up there before the block. I said to you guys the hierarchy this morning. You would have seen it. Breaker blocks are up there before the other blocks, but some of the things can do that because at the end of the day, you have to still check how true this is in relative to whatever price action is at the moment. Do you understand? I think that to a very large extent, breaker blocks are not as powerful as they used to be. Do you understand? Consider the concepts of imbalance. Do you understand? Because since the move has to create a breaker block, has to be a move that has no reaction, that is really broken or being created by imbalances. Do you understand? Straight move takes out an order block without reacting to it. So it's kind of like creating you see that you can have like a breaker block set and price just what still takes out the breaker block, more like trying to fill an X in the process creating a reclaim block. Do you understand? So I say that the breaker blocks have like a lot opportunity, right, to play out. But that doesn't mean they're still higher up there than other blocks. Do you understand what you're doing in relation to imbalance? Always be called for, no matter any of these PDRs, where price going to is still important. Do you understand? Where price going to? Is there anything that price could take me? You know, when you can answer this question, then that tells you which to head for. But yes, they are higher than the other blocks. Are you clear?
Yes, thank you.
All right. 23. Can you talk now?
Yes, I can. Can you hear me?
Please go ahead.
Okay, thank you. Okay, so not a particular question. I just want to get clarification. So you've talked about demand and supply, you've talked about PDRAs, right? But I'm still having like a hard time putting everything together. And I know that you said that there is going to be a slow learner class on Sunday. So I want to confirm now for that class, are you going to be touching upon like putting everything that we've learned, kind of like putting them together so that I'm not getting it in one in my head. I've tried mapping out on the chart, but I keep facing different blockers. Thank you.
Okay. Hear me? Because I think you're muted now. I'm going to leave an update on the slow learners class. I'd say maybe it's just for us to start we'll just next tomorrow, right? We'd have the class tomorrow instead, just before the normal sample classes, and then we'd start from market structure up until here, so that you get it all together, right? And then maybe examples instead of pre-marking them out, so that you see how it's in real. That's going to help you to a large extent. All right? Are you clear? Okay, I don't think you can unmute yourself again. I don't. Maybe your network or something, but
Yes, we keep zoning out.
okay.
But
All right.
thank you.
All right, no problem. Good day. You can unmute yourself.
Star, good evening.
Hi, good evening.
I have like 2 questions or 3 questions to actually ask. You talked about PDRAs, and from the PDRAs class, everything actually proceeds from order block. That is the failure of order block with no reaction gives you breaker block, and the failure of breaker block gives you reclaim block. And according to what you said order block is either demand or supply zone. So my question is that for a reclaim and breaker block, must they, like, is it compulsory for them to have a valid inducement before they play out? Like before the failure of probably the order block or the breaker block?
Okay, so
Hello? Is it my network? Hello?
Don't worry, she's not saying anything. Just hold on.
Okay.
Stan, can you hear me now?
Yes, I can hear you. No.
I don't know what happened for a minute or something. Just took me off the call. Who was talking before? Victor, please go ahead. Still here. Okay. Why he's coming up? Emmanuel, please go ahead.
Good evening, ma. Please, can you go to your chat?
Yeah, good evening. Of course.
Okay.
Can you see my screen?
Yeah, I can see it now. Please, assuming we miss an order block, how do you know that price won't violate? Like most time, I do get a valid order block, but when price is retracing, price just take it out. So I just want to know if there's a way that will know that I'll be able to differentiate between a retracement to my order block or a change of character, because for a retracement to happen, a change of character needs to happen, and most time it just keep taking me out. So that's That's my question. And my second question is based on imbalance. I've noticed that the way you map out your imbalance is different from the way all ICT traders market out. So I just want to know if you do it, if your own is different from their own, because you guys call it the same imbalance or fair value gap. Because I was trading ICT before, so most time when you mark out your imbalance, I tend to get confused because you say your own needs to, but ICT makes use of three candles and the imbalance is always at the middle. So I just want to make sure I'm getting it. That's it.
All right. So first of all, your question is going to be answered when we get to entries, right? And then the second question, but there's that's why I said that there's a difference between imbalance and, right. You can see people actually make out entries from averages for averages. So I won't teach you averages, right? It's not something tested and it's not something that I can speak on, right? I don't trade averages, and that's why I can teach you averages, and that's why I just took part of it, which is what the imbalance. That is why I say that you can interchangeably, right? But when you now start getting to the point whereby people are using the percent of imbalance on field and all of that for entries and all of that, it's now different. Do you understand? So what I'm mapping out for you is just the chance that you're waiting for to come back to field, right? There's nothing deep there at all. Do you understand? So only good evening. Unmute yourself.
All right, hello, Star. So I asked the question earlier in the morning, but I don't know if you saw it. It has a diagrammatic
No.
representation, and I tagged you to it on Telegram. I don't know if you can check it out.
Okay, just send the message. Tag me to it again now. While you're on that, crypto, you can unmute yourself.
Good evening. I want to ask a question concerning an order block. Let's say I have a supply zone at a lower high and the supply zone fade. So you said there is a change of character. The first break of structure is a change of character. Then we'll confirm it by a second break of structure. So during taking breakout block entry, we have to wait for 2 breaks after the supply zone field before we can take that zone as a breakout block entry.
Okay, so breakup blocks you can use if you're trading breakup blocks, right? Most of the times, price actually creates what do you understand? So at the end of the day, no matter what you're trading, establishment of that business are also very important. Do you understand? Sometimes when price comes to breakup blocks, it creates inducement, whether internally or externally, but it closes on before mitigating the breakup block and then continuing. Yeah, it doesn't. But you now know or you now understand that the ones with the inducement probability. So sometimes you can see that structure shifts, like you put an extra BRS to like confirm it. But whether the structure shifts taking out like that, it automatically creates a breakup block. Do you understand? But then that second breakup structure that for the mitigation on the breakup block just makes it of high probability. Are you clear? Okay, I think you're muted and you can't talk well. Are you okay now before I take your hand down?
Yeah, I'm okay. Thank you.
Good evening, Dr. Femi. You can unmute yourself.
Hi, good evening, sir. So, the question I want to ask is on order blocks. So there's some the issue I have with it is mapping it out. Yeah. So there's sometimes I don't know how big or how small it's meant to be, but I know ideally what I admire of it is that is the opposing candlestick before an impulsive move. So it's the whole opposing candlestick. But sometimes that you map out the order block, it's not really covering the whole candlestick. And the way you map it out, that it's kind of convincing to me that I don't know. So and sometimes once you map it out, that's okay. Sorry, and then once you map it out, price might, if it's too small, price might intend to just tap into it. But if it's too small, you might not just tap into it and just go the direction it's meant to go to. So that's my issue on everything.
Here's the thing. I taught you guys the right way to map out other blocks. I told you understand that another block is the last opposing candle before a bullish one or last opposing candle before. You know that already, right? Now when you map out that most of the time they are being formed by what engulfings. So when you're mapping out with what the smaller candle up, which in the case of the bullish one is what the bearish candle, right? And map it up to the one that has the lowest bottom chart, and you still do the same thing when it comes to what the bearish order blocks. You map out from the bullish candle there to the one that has the stop there. Now the reason why you see me most of the times go down is because I already know. Do you understand? And that's why I get to like refine my entries. I told you personally about your other blocks like this. Then all you have to do is what map it out like this. When we get to entries, when we get to refining entries, we talk about how to now cut it, how to map out from lower, like, how to now lower the other block, how to refine the entire other block and all of that. Right? That's coordination at the moment is when you're mapping out your other blocks. You don't know how to map out your other block, use what those smaller candles, then the lowest for the uptrend and the highest trend, just like that. When you get to refining, you will see who refine my own or how I do refine my own. Right? These are things that you would cover. The film is not completed yet. Okay. Moose, I don't know if this is Moose, Mouse, MUS. You can unmute yourself. Good evening.
Good evening.
Yeah, good evening.
Please, you posted the hierarchy of PD arrays, but you didn't say anything about old highs and old lows, and also liquidity void.
Yes, I'm gonna explain them, right? But then I'm focused on, if you see whether you just PD arrays, I focused on the ones that you're going to name, right? These old highs and old lows that you see, they are kind of so under mitigation blocks as well, just a form of liquidity to target. So even when we get to entries and targets, you see them again. Do you understand? They're usually like majorly cash takeout and all of that. So definitely there's no part of this that is not going to be touched. Do you understand? But good coming is where they will come in. Do you understand? It's easier for you to understand, right? So, Victor, I think you're back again. Your second and third question, just go straight to the point, please.
Okay. My question is like, since the PDR is like the RB and MB mitigation, I'm sorry, reclaim block and breakout block literally proceeds like from the other block. And for us to get another block, according to you, we have to use those validations. Since you said like other block is like demand and supply. So my question, and one of the validations is inducement. Is it compulsory for reclaim blocks and breakout blocks to literally have an inducement before they are like is it compulsory for them to have an inducement, like a valid inducement? Then my second question is is one of the criteria in marking out supply and demand zones is imbalance. Now my question is, let's say there is another block and it just forms a series of small candles, then an impulsive move, but the inducement, that is the pullback, literally taps into or fills this imbalance. Is it still valid? Is it still like a valid FVG to drag to you said it's like price magnet? Is it like a valid value gap to magnet price back to it since it has been tapped by the inducements? Do you get my question?
It depends on how filled it is. Do you understand? If you filled it 100%, then of course not. Do you want something attracting about it again if it's filled 100%? If it's filled partially, price can come back to still complete it. So yes, at that point it is still a price magnet. And then the other question we talked But inducement makes your setup type probability. When you're trading with stocks and you have inducement, structural type of inducement, most especially, that makes it better. Not always create structural inducement. I think especially when it comes to right, most of the type of liquidity form. I mean, when it comes to the reclaim block type of entry, only an engineered type of liquidity. When we get to entries about all these things clearly, so that you're not confused, right? Not supposed to. When we get to entries, we look at this. Do you understand? Well, for your other question, yes, on whether they are filled 100%. If they are not, there are chances that they can still attract price. All right. So, Golden Invest. Good evening. Can you unmute yourself?
Okay, so my first question is about reclaim blocks. These reclaim blocks, is there?
Question about game.
Are you hearing me?
Yeah, of course.
So my first question is about reclaim blocks. These reclaim blocks, do we need to follow the trend in order to trade them, or wherever we see them, we can trade them?
You have to follow the trend.
We have to follow the trend, right?
Yes, definitely.
Okay. And my second question, which is actually in your DM already, I don't know if you can check it out and then respond here, or should I say it again? Because it's kind of a chart illustration kind of thing. Can you hear me?
Yeah.
I can't hear you. Are cracking.
David, meet you.
Okay,
Yeah, I can hear you. Go ahead. Yes. Am I the one having network issues, or I can't hear you, David?
Can you hear me? Good evening, speaking.
Can you hear me?
Yes, I can.
Okay, Golden Invest was not done with his questions before you asked David to so I muted David back so that Golden Invest can be done.
Oh, okay. All right.
Okay. All right. So my question, the other question is about Fibonacci retracements. How to place the Fibonacci? There is an example on a NZUSD where I wanted to know where to pick the Fibonacci from and how to do it. Because I know how to pick out the demand zones and the inducement and everything. But there's some situations where you pick a particular low to place the Fibonacci, which is not the lowest low of that leg. So situations like that is the kind of situation I'm in right now.
When you're talking about placing Fibonacci, it must be on the demand zone of concentration. It must be that leg that's your demand zone of concentration. In this case, now let's say your point. Do you understand? Your Fibonacci is going to be placed from this higher low to this higher high. This higher low to this higher high, not low to this higher high. Do you understand? You can see that I didn't. It has to be just the higher low or to the higher high that encompasses or includes the demand zone.
Yes, ma'am.
The same thing for the supply side.
I totally understand now. Yes, but there is one part. Can you go to GBP NZD, please, on your chart?
Okay. GBP NZD. Let me see if I have it.
Okay, see this leg before the new break of structure now. This leg, Can you help me mark it out? This low and this high.
One.
Yes, that one. But that is not.
Is it that one?
That leg. Is that where I should put my Fibonacci or this lowest low of the leg?
If you're mapping out the structure right from this point, you see what price has been doing like this, like this, like this, like this, like this, like this. If you're mapping this out, this would be areas of what consideration. This is here, this is here, this is here. So if you're considering it like any one zone in that leg, you find out that on the 4 hours time frame, this is what the higher low, this is what the higher high. So you're literally mapping out
on the left, right?
You already did what?
We already broke structure and had the retracement already before that higher high that you are putting your Fibonacci now.